Hello everyone. Let us now, I am receiving unsolicited messages asking me to invest in Abhinav Leasing and Finance Limited. So I am interested in knowing what are its financials and how it has gone about. When I have gone to reputed brokers, there is no information on this particular company because nobody is tracking it. Therefore, I have gone to moneycontrol.com and then I have seen the historical graph. This particular share was almost nearer to zero or only 2 rupees in February 2015, and it was ramped up to 19 to 20 rupees by October 2015. There was regular messages like this even during 2015 also, because of which a lot of people have purchased most probably, and it has gone up to 20 rupees and it has remained stagnant there. Even now when I am receiving these messages, the price is around 19 and it is trying to go up to 22 during this period because of the regular and incessant messages that are sent on the mobiles, push messages, unsolicited. Now let us see the results. So let us see the financials of this particular company, Abhinav Leasing and Finance. Its equity share capital has remained static at 5 crores from March 2012 to March 2016, and reserves and surplus were around 0.48 in March 2012, and which has increased up to 0.52. That means only 0.04 crores has been added as reserves. That is the profit that has been added, 0.04 crores in a matter of 5 years. So total shareholder funds have remained stagnant at 5.48 to 5.52 crores. Now long-term borrowings, which were around 0.92 in March 2012, have obviously been repaid. There are no long-term borrowings now. In March 2014, entire long-term borrowings have been repaid. March 2016, there is zero long-term borrowings. Other long-term liabilities, long-term borrowings have been replaced by other long-term liabilities like debentures most probably. So in March 15, the external long-term, other long-term liabilities have gone up by 6 crores. Long-term out of the 6 crores, then in March 2016 it has remained at 4.41 crores other long-term liabilities. That means the long-term liabilities like debentures have been, or bonds, okay, debentures have been raised to repay the long-term borrowings of the earlier nature of 0.92, about 1 crore, and 1 crore with interest has been repaid. So it has come down to, and it's come down from 6.34 that is raised to 4.41. Around 2 crores have already gone out. Okay, and the non-current liabilities are around 4.4 crores. Now total payables are 0.16 in 2014 have come to 0. Other current liabilities, which was 0.25 and 0.55 in March 2013, have come to 0.09, and total current liabilities of 0.55 in 2013 have come to 0.09. So capital and liabilities come to, as on date, to 10 crores. Now, what are the non-current assets? The tangible assets 0.42 were, which were in 2012, have regularly gone down to 0.08. So tangible assets have been sold away. The company has been selling away its tangible assets, and it is especially in the third year, it is 2014, in order to repay, it has sold its assets of around say 26.26 crores. Yes, 0.3 crores or 0.26 crores. It has sold its tangible assets to repay the long-term borrowings. And its non-current investments are around 0.01, very negligible. And long-term loans and advances, it has given loans and advances, okay, which was around 2.5 in 2012, which came down to 1.92 in 2014, and this has gone up to 8.97 in 2015 and 7.11 in 2016. So its current assets inventories are around 2.07, trade receivables are 0.48, cash equivalents are 0.18, and then the total assets are 10. So this basing on this, what we can infer is that it is now giving long-term loans and advances of the level of 8 to 9 crores based on an equity of 5 crores. Okay, and it has replaced long-term liabilities It has replaced long-term liabilities with the other long-term sources. Okay. Now let us see the financial ratios. This is Abhinav Leasing and Finance. Its earning per share. Earning per share is 0.01. Its earning per share is 0.01, which was negative in March 2012, which was 0.12 in March 13, has come down to 0.01, very negligible. Okay, its book value is 1.10. It was 10.97, come down to 1.1. Its book value has been eroded by 10 times. Its book value has been eroded by 10 times. It was 11 for the last 3 years, 12, 13 and 14, and it's gone down to 1 crore, only 1 rupee per share. External reserves, so its reserves and capital have gone down, book value has gone down to 1. Its revenue from operations, which was 0.70 and 0.79 in March 12 and 13, has come down to 0.45 in March 13. It was lowest in March 15. It's 0.30. Its EBITDA per share was 0.21 in March 12, gone up to 0.25 in March 13. It was the best year. Then it has gone down to 0.01 in March 15, and now it is improved to 0.17. So March 15, when actually the share went up from February to October, its EBITDA per share was 0.01. EBITDA per share was 0.01. Now, what are its margins? What are its margins? Let us see the margins. Its EBITDA margin, which was 29% in 2012 and 31% in 2013 and 20% in 2014, has now went down to 4% in 2015 and now has gone up to 37%. And its PBIT margin, which was at 18% in 2012, 23% in 2013, has gone down to 0.39 in 2015, has now regained its position of 35% in 2016. Its PBT margin, which was 12% in 2012, 18% in 2013, has come down to 0.27 as profit before tax. Profit before tax is 0.27. The net profit margin is 0.21%. It was negative in 2015. Return on net worth is negative in 2015. It has now just turned positive at 0.08. Return on capital employed was negative in 2015, has just turned positive at 0.04. Return on asset was negative in 2015, has just turned positive at 0.04. Total debt equity is at 0 and asset turnover ratio is 22% now, and earlier it was 12%. So what does it indicate? It indicates that the company has started activity, very solid, strong activity in 2016. After 2015, actually 2015 the price went up in anticipation of the increase in activity. The current ratio, which was about 23% in 2012, went down to 5% in 2014, went up to 2,400% in 2015 and 32%. It has stabilized at 32% in 2016. Its current ratio is most probably because of all this, hype in the market. And the quick ratio, about 138 in 2015, has come down to 8%. Inventory turnover is at 1%. Earning retention is 0. It was 100% in all the 3 years, 12, 13 and 14. It is 0 in this 15 and 16. It has not been earnings, it is not retaining any earnings. Enterprise value, which was 0 in 12, 13 and 14, has been estimated at 53 crores in 2015 and 100 crores in 2016. So its capital is 5 crores, its enterprise value is 100 crores. Okay, and economic value by net operating revenue, it is about 35 in 2015 and 44 in 2016. EV by EBITDA is 849 in 2015 and 118 in 2016. Market cap by net operating revenue was 35 in 2015 and 44 in 2016. Okay, and its price by book value is about 9 times in 2015 and 18 times now in 2016. Its price by net operating revenue was 35 in 2015 and 44 in 2016. So from all these things, what we can infer is that the company has just started working full-fledged in 2016, and it had a price hike run on the price, and that is a very fast growth in price from February to October, from 2 rupees to 20 rupees, and it has remained at around 20 rupees at this particular point of time. All its entire enterprise value of about 100 crores, okay, based on 5 crores of capital, will come to about 20 times, okay, which is the price it can be paid, 20 times into 5 5 rupees, okay. So its price is still within the enterprise value, within the range. So those who are interested in backing a leasing and finance company which has just started working from 2015 and 2016, which had almost closed down in March 15 years, okay, and 13 14 and 14 15 were the very very poor years for this company. So based on this, the plus and minus for Abhinav finance and leasing and finance, you are free to make up your mind to invest. If you invest, in my view, you may not be very much off the mark, but the price increase will not be that appreciable. But because of this particular campaign that is going on the smartphones and the normal phones with push messages, some brokers are hell bent on increasing the price, or at least doubling it, like they have done it from 2 rupees to say 20 rupees in 2015. They'd like to repeat the exercise in this time also. So if they are at it consistently for 1 year, then you may see your investment growing up. Thank you for watching.